Hello everyone, welcome to today's webinar. My name is Yaroslav Burchenko. I'm a market analyst at Olymp Trade, and I am happy today to bring you a very special money system. Now, we've talked about the Martingale system before. We talked about 1 to 5, 1 to 2 money management rules. Basically, this is the way that you want to manage your money so that you can stay in the game longer and you can have money when you need to make a good trade, a solid good trade. You need to make sure that your account is still there. And so a good money management system will bring you to that point. It will allow you to stay in the game. Now, before we get too far ahead of ourselves, let me go ahead and ask you guys how the sound quality is today. And I do want to mention a few of my friends, like, hey, Mohammed Tariq, good to see you, my friend. He says, welcome back, very happy to see you and very excited about today's webinar. So am I. Now, there was a lot of traders that asked for the for a money management system that allows them to kind of think less, if you guys understand what I mean. So to quickly have a very static system where, say, that's how much we're trading, that's how much we're trading, that's how much we're trading, compiled together with technical analysis allows to have a very clean and efficient system. And that's what we are going to be talking about today. Dr. Manajit Paul, hello, welcome. Good to have you guys. Jayashri Ravikumar, I saw you at the stream yesterday, and your answer about having the 25 period, it's a new high over the last 25 periods. That was a really good answer. Very, very good, thorough answer. All right, so now that I know we can hear and see each other, thank you guys for writing out your welcomes. So on the screen today, we have the Olymp Trade system for Android. This is the Android system. And we also have a way of managing money. Now, because I'm going to be doing a lot of these trades live with you, today we're going to be talking about the Anti-Martingale system. It's called the Parlay management system. It's very popular in sports betting, and certain casino games also use this kind of system. Now, because it says anti-martingale, I want to talk about the martingale system in and of itself, because this the martingale system makes you have a bet, or so every time you win, you basically bet less, and every time you lose, you bet more. That's the martingale system. It has a little it's more risk leaning towards losses. So you can actually make a series of losses and then not come back. Not come back. And that is the opposite of what we want in trading. We want to make sure that our losses are very, very small, and that when we win big. And because we're usually trend traders, I know some of you are really good at reversals, but the markets in general, right, they love to trend, and we love to be there when they're trending. And so the anti-martingale system, the parlay system, makes for a trading system that has minimal losses. And the only time that a trader can, quote unquote, allow himself to lose money is when he's in the profit, right? You should not allow yourself to lose money unless you have made a little bit of profit. So again, we start small. We start betting, or we start opening trades with a very small amount, and I will teach you guys how to use it and how it will look like live on the platform. Now, both of these systems, the martingale system and the anti-martingale, they are usable in the currency market. It works fantastic in the currency market, but it also can be applied to other things like stocks and indexes, because all three of these assets, they have short but clearly defined trends, and arguably indices trend for an exuberant amount of time. And so it works really well with very flat, trendy markets like the Australian US dollar was a very flat, trendy market. Now, this methodology is used to amplify winning streaks. So as it's popular to understand that when a trend starts, it is more likely to continue than to turn around, basically, is the premise. And so this strategy works to capitalize on such an event. So you find a nice trending market, and you look for a position to the top side. Now, I'm also going to be giving you guys some indicators that will allow you to capitalize on these things. The CCI looks different on the well, that's the MACD. The MACD looks different. All right, so like I said, this strategy, the reason I have picked it for trading on any kind of FTT or Forex is because it has a very, very good rate of return. Excuse me, not rate of return, but it focuses mostly on amplifying your winnings, and every time you lose, basically it goes down. Let me give you an example how it works. We are looking for a trade to open to the top side. I'm going to be looking really quickly through the asset list and letting you guys know, say we're going to take a trade. If that trade does not go through, we are basically cutting my trade size. So I have a $6,000 demo account, guys. Make sure to demo this system first. My trade of, say, 5% of my account is going to be 300, around 308, but we'll round off to 300. If I win, my next trade is going to be 600. If I lose, then the next trade is going to be 150. All right, that is the basis of the trend or of the stock. This, guys, is where we're going to come together. Anybody see an asset that is tradable? Anybody have a good entry point? There's a few U.S. crosses that I had to look at, like here, say the U.S. dollar Japanese yen. Because we're going to be trading minutes, I'm going to go ahead and drop down to the 10-minute graph. Maybe even 5-minute. But this market pattern right here, oof. See how we're getting tightly coiled? Uptrend here, downtrend here. So not a really good entry point as of right now. I wonder if all the markets are going to be like this. Let's go to ETF. We're going to trade some ETFs, some currencies. Look at the euro-dollar currency pair. Yes, I agree. The Android system is at some points frustrating, but it's only a matter of practice. It is a different platform, and I actually have a webinar for you guys later on in the month. Let me see if it's planned already. I'm going to be hosting a webinar about all of the different platforms that there are to trade. Do you know that there are at least 3 different platforms that you can trade with Olymp Trade while you're trading through the brokerage? So it's a matter of preference. It's a matter of finding your at least 4. There's 4 different platforms that give you the same valuations for the same assets. All right, let me just double check something real quick, you guys. Man, I see a lot of you guys are struggling. A lot of you guys are suffering. Let me see. So Anoop, what has been the issue? What caused you to lose such an amount? So I'm going to find the webinar, guys, for you about using the different platforms. It's going to be something you don't want to miss. It's actually going to be coming up a little bit later, you guys. It is going to be on the 22nd of April. Gang, 22nd of April is when you want to come back for the webinar about the different platforms available. All right, so anti-martingale strategy. We are looking for a trade. We're going to start a $300 trade with a $6,000 account. That is about 5%. We are going to be opening in it for 5 minutes. All right. 5-minute, $300 trade, Euro USD. Oof, on the 5-minute. Yeah, I guess we can see that continuation for sure. So we have confirmation. CCI broke or getting close to breaking out. MACD definitely has some downward momentum. Again, we're just practicing. I want to make sure that I can give these trades to you. Again, this is the demo account. I probably could have even done a minute. I want to show you what the strategy looks like and why you are in the positive territory at the end of the day, because adding together. Now, there's a few things, again, that are iffy. Again, with like the martingale strategy, if you lose too much after a certain amount, one trade will cost your account. Same thing with this strategy, guys. Imagine, so our first trade is going to be 300. Our next trade is going to be 600. The next trade is going to be 1,200. You can imagine that in the next trade after this, one loss could cause me to be unable to come back to another trade whatsoever. So this is the strategy, or this is the exception to the rule. We want to have a stop out. So there are a few options that I have for you. When do you stop doubling the trade amount? Well, one, when a trade will take more than 50% of your account. So after we have a successful trade for $1,000, 200, the next trade is going to be 2,400. That is the final amount that I'm willing to double, because after that, the next trade amount is 5,000, and that's almost my entire account. So if one trade is worth more than 50% of your account, you need to stop upping. You can still place trades that will cost 2,400, 2,400, but no more than that, because that will essentially, if you have two losses in a row, it's going to take you hundreds of percents of gain to make back just to break even. So again, the stop out, the end for the trade will be you can either, there's a few stops you can go. So either it's half of your account, no more, do not go more than that. Another way is to not double more than 2 times. So again, my trade of 300 would double to 600 and then would double to 1,200. That's the end. That's it. No more doubling after that. And again, it all matters on what your initial trade amount would be. I picked a percentage of 5%. That's killer. That's really, really high. You guys can go something as low as 1% or even 0.5%. Guys, when I teach my students about trading on the MT4 platform, we have a risk tolerance of 0.5%. 0.5%. But that is more of like portfolio management and having the ability to trade over the course of a long period of time. So it's long-term trading, swing trading, things like that. So we're still struggling, fighting around this line. I'm glad we didn't take a 1-minute trade because it allowed for price to fluctuate. Again, I am on the 5 to 10-minute graph, so it's difficult to gauge how long. So we got about 1:50 left on our trade. So we'll let that go. Guys, the assumption that the anti-martingale system makes is that traders can only allow themselves to capitalize on a winning streak, right? When you lose consistently, it's to double your losses is kind of pushing you towards the direction where we don't want to be. Again, I know from human psychology that to most of us, it is much more acceptable to lose a larger amount when you have already won a large amount. And that allows traders to reserve that emotional capital. A lot of you don't think about how you feel after a day of trading. If you feel miserable, if you feel that you're really unhappy, then this is a difficult route to take. It's a difficult job to continue. So awesome. You guys are writing a lot in chat while we're waiting for this trade to go through. So we got about 43 seconds. I'm going to quickly have a glance at chat. Do one live trade. So I do consider this live trading. Never play during fluctuation time. Fluctuating a lot. So that's the high volatility that we are now going through during the European trade session. So here's a question from Karthik Kayan. V. Sir, kindly suggest the idea to retain profitable trades and minimize losses. That's exactly what this trading strategy is about. So every time you win, you then have an opportunity to increase the trade size. Now, another way to kind of control the strategy from getting out of hand is to use a 5% increase rule. So we talked about the ways to limit the growth of the risk. Another way is to increase trade size not by 100%, but say by 5%. Now what I mean by that is 5% of the account. So again, if we take 5%, in my case, it'll be 300. So our trade is going to be 300. The next is going to be 600 if we take 5% of 6,000. And then the next trade will be 900. And then the next trade will be 1,200. That increase of 5% will allow you to, again, stay in the game longer, yet to have a solid growth to your graph. And if you guys have used the MetaTrader before and had a look at the platform, the services offered on the website, the MQL website, you'll see that a lot of people publish their trade signals. And when you see a graph that looks like this, that is the anti-martingale trade system. That is exactly what the profits look like for a good anti-martingale system. And you combine that with good trade management, with good entry points. So you're looking for a strategy, a way to enter the market that offers really, really pinpoint good trades. So some systems, like a 1 to 7 risk to reward system, allows you to enter trades with a 40% expectancy. So you only win 40% of the trades you take. With the anti-martingale system, you need to make sure that your trade entries have a higher expectancy than 50%. That's where the trick lies. That's where the enduring part of this webinar, of this entry, of this money management system resides. I'm just reading your questions at the same time as I speak in. So Saya Satya is asking, sir, we need more videos for different news events, exactly like that video made from previous non-farm payrolls. I've learned a lot from that one video and many others. Sai, thank you for saying that. Again, let me go ahead and open up the calendar, and I have that video for you right here, my friend. Let me go ahead and get a link for you. So this is for Sai Sathaya. This is the video on how to trade the news. I'm going to go in depth about it, and you guys can have a look at the link. I'm going to pin it in chat. That is for my man's side. So let's go back to the trade. The trade went out. It went in our favor. Again, it wasn't one of oof. Oh, this is the demo account. This is me going ham on the demo account. So now our next trade amount is going to be 600. Now we can allow ourselves to increase the risk. It'll be the 200 plus that we made, and then that little extra bit of cushion allows us to take a little extra bit of risk. So I'm going to go ahead. Today's webinar is going to be with a 5% gain. So again, 5% of 6,000 is 300. 10% is 600, 15% is 900, so on and so forth. That's going to be what we're going off against. And again, I want to have a good rate of return. I can't believe I got a pitiful rate of return. Oh, actually, that was around Aussie CAD. So this could be another trade to the bottom. I don't know about that, actually. So please no spamming in chat, buddy. Piyushov Dev Car. There will be no risk-free trades today, so I do apologize for that. We are going to be opening up some trades together. Okay, that's a little bit more user-friendly for me. Hey, SK Don. This could be a trade we can take on a smaller time frame. I would like it for it to start moving. Like, have a look at this, the British pound, Japanese yen. The only thing that worries me, see, this one is going higher. These guys are going lower. And same thing here. We went from high to a new low down here. This really looks like a reversal. But again, the 5-minute graph, this is why I don't trade on such a small time frame. The 5-minute graph, what does it really show us? We're so far away. Like, the most natural direction for us to take right now would be higher. Yeah, so again, you would do that when you would have something like this, large candles that signify that we're going up higher. Then say for a 5-minute trade, maybe a 3-minute trade, we can look for something smaller. Samuel Josephson, hey man, welcome. So we are practicing the Martingale system, anti-Martingale, and we're looking for a trade to take to increase the risk size. By the way, here we have 600 now. Super difficult to trade that. Ooh, but I would take that to the downside for sure. Just we're at the top of the channel here, guys. Let me see if I can draw that out for you. Even if we disconnect from the fact that we're trading a little bit below, say, these levels, again, it would be a really good entry here either way. We're on a 5-minute trade at prices going past actually our level. Again, super important to not jump the gun. This is something that all retail traders do, is they ahead of time jump the gun, and this is definitely something that we have done here today. We haven't even reached the top of the channel there. Anyways, that's why we're on the demo account. Sir, for Forex, which 2 EMAs can be used to get correct signals? It depends on which time frame you are trading. So the smaller time frame you have, then you say want to go ahead and use a smaller time frame moving average. But for all traders across all time frames, my recommendations would be, say, 23 to 32. So either 23 or 32, the two Fibonacci percentages. And you want to have a larger moving average, say either a 50 or a 100. On my graph, I usually have a 50 EMA, a 100 EMA, and a 200 EMA because they give me the most solid, kind of equally weighted across time signals, and that's what I'm looking for. I'm looking something that is simple yet very effective, very calm. So Cyril Afibach, this video, in the beginning, I went through a detailed explanation of the anti-Martingale system. It is a way of managing your money and managing trade size to get to find a period of time where you are successful for a few trades, and after every successful trade, you then increase the trade amount by either percentage or either times 2. So during today's example of the strategy, we're going with a 5% increase or decrease of our trade size. And this Martingale strategy, the reason why I believe it works better for trading than a normal Martingale is because we, again, limit risk, and then we make higher trade size as our account allows it. So the larger our account size, the better the result will be. And vice versa. If you're losing money, this trade strategy will stop you from losing incredibly large amounts. So our trade should be coming to a close in about 1:40. Just like the first one, it's very clutch. It's very close. So what you can do in order to avoid this kind of clutch and close moment is, again, use a X3 of the time frame. So if I'm using a 5-minute time frame, then I should be trading 15 minutes, which will allow the graph, the time, to get through this level. We did not do that, again, for the sake of the webinar, so we can keep the action going. It's very close that we will lose that money. Yeah, we're really good about that. Olymp Trade does invest a lot into its traders with different reward systems, with lots of prizes. Think about the account boost that you guys have. By the way, I wanted to show this to you guys here in the help section. If you go to deposit, actually here, more, and deposit, there are actual promo codes that I could have used. Like here, there's 2 promo codes that I can use to get 40% to my deposit. Like, I remember we used to have challenges where the winner would get a 40% deposit. Here, from just by using the deposit menu on your cell phone, you have an extra promo code. So that's I think that's actually quite a lot giving back to you, because basically we're spotting you the money. The money is like, so in 15 seconds, the trade is likely not going to go through. And so as this trade falls through, if it falls through, then we are going to decrease the risk amount once again. Oh my goodness, look at this, guys. In the last second, did you guys see that? I wish this was my live account now. At first, I was kind of bummed out that the trade was going to close. Did you guys see that? In the last few seconds, trade came to us. So that means our next trade size is going to be $900. So there we have it, you guys. That is the gist of the Martingale strategy, the reason it works. Do you notice that the next trade we are going to be trading 900? So that is the maximum loss that we can endure, whereas our previous trade was 600 plus 300, which is the same 900. So how do you win? How do you win? That the breaking point for the strategy where we break even and into profit is after the cutoff point where you choose to limit your risk. Does that make sense? So each trade strategy or each time you win after the cutoff point, which in my case was 1,200, so in 4 trades, so 2 of them were positive, I have an opportunity to have one more trade plus another 5% of the deposit, and then the final one. And notice that I kept the amount static. Another way to increase is 5% of 700 is now 350. So we have a larger possibility to make more as our account grows, which again is what I was talking about a little bit earlier. So we're coming up to the end of the webinar, you guys. If you have any questions, go ahead and let me know. Jay Sri Kumar is Anti-Martingale System, trading in different assets in different period. I thought chasing the same asset. I mistook completely. It has to deal with, you're very correct in pointing that out. The premise, the kind of scientific premise, is a hot hand fallacy. Now, for those of you that know what a fallacy is, it basically means something that has been proven to be not true. And what that means is there's an understanding between, say, gamblers or traders that as you win a certain period of time, you are more likely to continue winning, which again jives with the market theory that also if a trade is to develop, it's more likely to continue than to reverse right away. And that's what this trading or money management strategy is looking to cover. It's looking to cover when you go on those series of wins. Simunda Siudang, I do not appreciate your lack of respect, I would imagine, because trading my live account as I'm teaching you the ropes of a new strategy, of a new money management strategy, just so you can have some laughs, some kicks, I believe is a little bit unfair. My live account trades, sure, we can go ahead and have a look at those. So the Johnson & Johnson trade that we took a week ago did not go through. So here the Johnson & Johnson trades, both of them fell through. The one that I had outsized risk fell first. Our trades, our previous positive trades, they cover that. But I do want to warn you guys that right now is a time of shift in the U.S. markets, and we are waiting. Basically, there's no guarantee that the U.S. markets are going to continue going forward. So have a look at this. The daily action outlines that we are not finished falling. So, and you can see this across all of the U.S. markets. So watch out. Be careful when you're buying stocks. Make sure that the broad market is now starting the next leg up. As you guys can see, when it grows, it really grows, and that's the time you want to get in. And that's the time that we're really close to getting in. So that's why I urge you to pay attention to the U.S. markets. All the trade ideas that you have are likely to go through. There is a shift in dynamics, but the market is going to give those people that stick around right now while the time is uncertain, make sure to not lose all your money. Practice something like the Anti-Martingale system. So Sai Satya is saying, for example, if a new model smartphone is released by Samsung, does it make a push for Samsung? Yes, it does. It makes a push for Apple. When Apple released their iPhone 10, they had a stellar year before they went flat. They had a stellar year. If, say, talking about Tesla, every time Tesla has a new... So this right here was a 4-to-1 or 5-to-1 stock split for Apple. This is not an actual market fall, 5-to-1 split. But what I was wanting to show you was the trade action last year. So somewhere in between here was the release, actually somewhere here after the dip. This is the April dip. Apple releases a new iPhone. Their stock skyrockets. And if we zoom in, actually have a look at something in the short term, this is also a... also a growth. Like again, if we kind of get rid of if you can barely see it right here, unfortunately the graph is very difficult to see, you will see that this is also an uptrend. So this move right here, basically it continued for Apple, and that's what you want to watch. This is why trading the news is important, and that's what I'll go over on the webinar that we have. It's actually pinned in chat, how to trade the world events. We'll go through different ways, like Disney. If there's a new Star Wars film that comes out, Disney's likely to grow. If there is a flood, say somewhere in the south of the US, you want to check what kind of construction companies are there. And because construction and real estate will grow despite the fact that a lot of it gets damaged. Yeah. So that's it for today, you guys. If I missed any of your questions, make sure to leave them down below in chat. We will go through your questions one by one. All of them will get answered. I do want to invite you to next week, where we have a webinar about trend versus counter trend trading, and you will go into detail about the ways that the market acts. Remember, I said that there's a market cycle that's shifting right now for the U.S. It's very possible that instead of a new high in the U.S. markets, we're going to have a flat. Although very unlikely, there is a bunch of data that the U.S. is going to grow on the back of that $1.9 trillion cash stimulus package that they got. But again, until we actually see it happen in the price on the graph, then you don't want to jump the gun. Today, we just got lucky. On the demo account, there's a lot of lucky trades, but you understood the gist of using the Anti-Martingale system. The Parlay system will allow you to keep more of your account if you endure a series of losing trades, and you have the ability to multiply your account severely during a series of really good trades. My name is Yaroslav Burchenko. Together with Olymp Trade, we thank you guys for your time and wish you good luck trading out there, and see you all next time. Peace!